how could the pressure to have a better quality of life in China impact your metals portfolio? Joining me now from the San Francisco Hard Asset Show is Chris Barry of Discovery Investing, a newsletter he shares and writes with his father, Dr. Michael Barry. Chris, thank you so much for being with me.
Thank you, Danielle. It's nice to be here.
So I understand you're also a speaker at the show.
I am. Tonight I'm on a panel, and then tomorrow I've got my own gig.
And you're going to be focusing on China. And tell us a little bit about your thesis or your presentation on how this pressure to have a better quality of life might actually help metal prices.
Sure. Well, we're big believers in what we see happening in the emerging world. It's not just China. It's India. It's other countries as well, like Indonesia. Large populations, young, dynamic, growing populations, and they know how we live in the sense that they know what we take for granted in terms of quality of life, and they want that. And we think that builds a very strong long-term case for industrial metals because they underpin that rising quality of life.
Is silver leading that pact when you look at this forecast, Chris?
It definitely is. I mean, silver obviously has multiple components. It's got the industrial demand component, and it's got the precious metals component. So it's very interesting to take a look at what's going on there. There's a lot of volatility inherent in silver, but we like it long-term as well.
Now, Chris, we all know that China had a bit of a slip in their GDP earlier in the year. Does that not scare you? Are you still bullish on the country?
I'm still bullish. I mean, China was growing at, say, 10% a year for, a decade and a half, and that obviously was never going to continue. So, when you look at emerging market growth, everybody defaults to the BRICS, right? Brazil, Russia, India, and China, and the growth rates in those countries have all essentially been cut in half. China's gone from 8% to 4 or 5%. Brazil's down at 2%, China's 7.5%, and Russia is, let's just call it 4%. So, our argument is you shouldn't just focus on the BRICS. I mean, yes, they do have large populations, but there's a case for a country like Indonesia or Colombia or any number of other emerging markets that are growing at above trend, above global GDP growth rates.
Okay, so what are you seeing in Europe? How much consumption is happening there, and how might the slowdown impact metals that are primarily used for industrial purposes?
Well, in the near term, obviously the industrial metal space is very risky, and a lot of people have shunned it. You've got negligible GDP growth here in the United States. Europe is, if they're not on the brink of a recession, they're in a recession. So, longer term, we look at things like demographics, and that's why we're focused on the emerging world and maintaining and increasing that quality of life.
Chris, let me ask you, I know you like uranium. Tell us a little bit about why you're so bullish on this right now.
Sure. Well, we're, from a contrarian perspective, uranium is right in the crosshairs. This is a commodity that obviously in the wake of Fukushima took a huge hit. It was at about $75 a pound, and then it fell immediately to about $50, and of late it's been down at around $40 a pound. And so, one of the underlying thesis of our investing is that no middle class has ever sustained itself or has ever grown without access to reliable and affordable electricity. And of course, uranium, and by extension nuclear electricity, accounts for about, I think, 14% of the global supply. And we see a lot of the major producers of uranium mothballing projects or curtailing supply because it's economics. At $41 a pound, they just can't produce effectively. But you've got China building reactors, you've got the UK, you've got the UAE, you've got Saudi Arabia, you've got a number of different countries that are pushing forward with nuclear technology and nuclear reactor builds. So we see a near-term mismatch, and we think it's very good for the near-term uranium producers.
So how are you investing in uranium? Are you buying the stocks, the companies?
Yes, yeah. Right now we're very interested in what I call the near-term producers.
Okay. And when we look at the industrial metals, like for example silver, do you like the ETFs? Do you like the physical? How do you buy those?
Well, with respect to silver, I like the physical. I started this tradition 4 or 5 years ago when my first daughter was born, where every Christmas I don't buy toys, I buy her silver. And there's a lot of silence under the Christmas tree because my in-laws and my wife doesn't understand it. But nevertheless, it's a long-term play. And I tend to shy away from the ETFs, both gold and silver, because when you buy those, you're buying paper. You're not buying the asset. And I'd rather have have something in my hand in that respect.
And finally, Chris, I know you don't speak often about gold, but can we just get some of your thoughts on the yellow metal right now?
Sure. It's where are we at about $1,700 an ounce right now. Again, it's a good, sound, long-term bet. I'm a little hesitant to make any sort of prognostication about where I think it's going to be in 6 months or a year. I certainly think it's going to be higher, and it's going to be higher because of risks that we face with things like the fiscal cliff in the United States, or just deficit spending and the entitlement sort of culture that we have here in the United States and also in Europe.
Chris, maybe your daughter will luck out and get a gold coin this year.
Maybe, I don't know.
Okay, thanks so much for your thoughts today.
Thank you.
And thanks for watching our coverage from the San Francisco Hard Asset Show. You can email us any comments or questions at newsfeedback@kitco.com or tweet me at Dignala Camboni. Thanks for watching.